Hey everyone, it's Simon here. Welcome to your newsletter for Tuesday, the 2nd of April, 2024. Monday, yesterday, the 1st of April, was the market's first opportunity to show everybody what they thought of the PCE results that came out on Good Friday. And there was something for everyone in core PCE. The annual rate is showing deceleration, and it's at 2.8% year on year. It's edging closer to the Fed's target. The month-on-month data was a little mixed. The January figure was revised up to 0.45% from 0.42. That wasn't great. The February month-on-month data was showing deceleration from January at 0.26% month-on-month, still well above the Fed's target. The 6-month annualized rate is showing some re-acceleration. So really something for the bulls, something for the bears. Stocks didn't really care. S&P was down at 0.17%. The NASDAQ was up, similar sort of quantum, up 0.21%. So stocks basically flat. Bonds didn't like it. If we look at TLT was down over 2% on the day, which means bond yields were higher. If we look at TNX, you can see 10-year Treasury yields surging higher, back up to 4.32 or 4.33%, and the dollar surged higher as well, not surprisingly. Now, if you look at this move in the dollar, you can see that dollar's basically been trending higher since the start of the year. That has not bothered the stock market. Right? If we jump back and have a look at SPY, even though a rising dollar is usually a headwind for risky assets, it hasn't really bothered stocks at all this year. And a bearish person could argue, well, the stock market's wrong, the stock market's stupid, the stock market's going to pay attention to what the dollar's doing one day. Someone of a bullish persuasion would just say, well, look, this is bull market psychology. When a market rallies on good news and doesn't fall on bad news, that's just how bull markets work. Important to remember that we are coming into first quarter earnings season now, and this is certainly a window in the market where micro tends to matter more than macro. Month of April does have bullish seasonality. We quite often see stocks will run ahead of earnings. The market will show enthusiasm about companies' earnings before they report. And this is certainly a phenomenon we tend to see more often than not in April. And the stock that kicks off earnings for big cap, mega cap tech is Netflix. They're reporting on Thursday, April 18. Now, just on Netflix, if you're looking at playing a run into earnings there, just bear in mind that we've already had a big bump in implied volatility. Okay, IV percentiles up around 82%, IV ranks 85%. Just getting this from barchart.com. So the technical setup here looks pretty good, but buying naked long call options when implied volatility is already at those levels, not something I love doing. So I'm actually looking at playing Netflix by buying a long call butterfly expiring the week before the earnings series. That's a wrap for today's newsletter, folks. I hope it helps, and I wish you good trading.